Hey there traders, thanks for joining me for this free video from thestockbandit.com. I'm sure glad that you've made it, and it's time once again to take a look at the indices as we head into a brand new week of trading. Now keep in mind this next week is a holiday shortened week. The market will be closed on Monday in observance of President's Day. So if you show up all ready to go on Monday morning at 9:30 Eastern time and you're in your seat waiting for your screens to start giving you some red and green ticks, don't be surprised when nothing happens. All right, so this past week we did move a little bit higher once again. And really for the NASDAQ, that just meant the 9th consecutive week within this uptrend channel, which is very clean. This channel currently stands about 100 points wide from the lower end to the upper end. By the way, if you're not watching this video in full screen mode and on the 720p setting, right there in the player, that's what you're going to want to select for the best quality resolution on your screen. But again, last week we did edge higher. About half the week's gains took place on Monday's gap. We did mark a new high on Wednesday and then reverse lower to finish negative, but we still held kind of in this short-term channel area and then erased Wednesday's gains with a very strong push higher on Thursday and then just a narrow range on Friday. Nothing real exciting as option expiration just kind of kept things somewhat choppy. So here's where we are. For the NASDAQ, this lower channel line is around 2,900. Upper channel line, we're just going to call it 3,000. Those are the levels to be watching in the days ahead. Now keep in mind, these do rise daily, but as we head into Tuesday's session, those are going to be the levels to watch. And here again, we're right up here making multi-year highs in the NASDAQ. Volatility remains somewhat low, and we're just kind of creeping higher. We continue to see dips getting bought much more aggressively than breakouts. So it'll be interesting to see if we at some point really accelerate higher, or if instead we just kind of trend at this 45-degree angle forever and ever and ever. I doubt that's going to happen, but that's the state of the market that we're in, and we've got to respect that until we see a character change. As of yet, we have yet to see no character change, which means you trade on the long side and you elevate your level of caution at this point simply due to the duration and the magnitude of this run, but you continue to trade the long side until something else comes along to prove that that's not the best choice. For the S&P 500, this index was able to push a little bit higher last week as well. It made a new recovery high, and then Friday finished just 9 points shy of its 52-week high. That's way back here from May of last year at 1370. That's going to be the big level to watch in the week ahead. Now we've got a little bit of support here. Call it 1335 to 1340. That's kind of been short-term support. So if we pull back, that's going to be kind of the first line of first line of defense, I should say. But again, 1370 is going to be the big level. Be interesting to see if we are able to really accelerate and thrust through that level rather than just kind of knock on the door and pitter-patter around. It's going to be real interesting to see. For the Russell, this index has now put in a couple of weeks of lateral price action, so we've got this real clean uptrend channel, and then we've now moved sideways here and built this kind of base here. 815 has been serving as some support, and now we've got short-term resistance at 833. If we do push through 833, the next stop is going to be this a little peak right here from late last July. That's at 843. And then finally we've got the Dow, which has been dealing with this May high from last year at 12,876. We've been dealing with that almost every day lately for the past almost 2 weeks here. We've just kind of zigzagged across that level, contending with that 52-week high. Even though we've nudged past it a few times, we have yet to really free ourselves of that level when it comes to this index. Friday we saw a gain of 45 points. We saw obviously strong volume really tied to option expiration day, but at this point we've got an opportunity to really put some distance between current prices and this level that we're just now nudging past. And to do that, we'd have to look back now to the weekly chart of the Dow, and kind of the next level, this is not a major level, but it's 13,136. That's from May of 2008. And then beyond that, we're really going to have room up here to the 14,000 area. So it'll be interesting to see if we can see old man Dow get his track shoes on and start running, or if instead we're just going to kind of continue this slow grind higher. But for now, it's still a market where the bulls are in control. That deserves our respect, so be very careful out there. If you're looking for some trade ideas, you can find them at thestockbandit.com. We do offer a free trial. We'd love to show you what we're all about. Thanks for watching this video. I will have more for you soon, but in the meantime, trade like a bandit.